What I find is it's better to start on the higher time frames, like the weekly and the daily and the 4 hour in no particular order. Just because if you're using the higher time frames, there's two things. Number one, price just seems to respect things like support resistance a little bit easier on those time frames. You get less price moves spiking past a zone really quick and just reversing. When you're trading on the 1 minute and 5 minute time frames in a market like Forex, it's just a little bit more of a pain in the butt to do that. So I just personally don't do that. I look at higher time frames because they're just more reliable in my very humble experience, having almost a decade of trading experience. The second thing is that if you're using higher time frames, it gives you more decision time. You're not having to decide on what to do within a few seconds because emotions can start kind of like helping you jump the gun, and you can start making a lot of weird decisions that are inconsistent. When you're using higher time frames, right, you usually have plenty of time to analyze the trade before it sets up, and then whenever the trade does set up and it comes to the region you want to enter, say it goes into a resistance zone you want to sell, then you have the time to place that trade, to decide on what the risk is and what the lot size would be and where your stop loss should go and potential target. And then you can set all that up, and then you can let the trade start playing out, and you can use context, and as the time passes and the candles paint, you can start making decisions as to whether or not you should hold it, get out early if it's going sideways or going against you, and you can make all those decisions, and it's a slower pace, right? So you're having less neuroticism, you're having less of a speedy brain that's like blazing through all these quick decisions. So higher time frames solve this problem, makes it very, very nice and slow paced.